Hello, my name is Derek Afasi. I'm the owner of Afasi Financial Group based out of here in Tampa, Florida. Today's video, we're going to be talking about disability insurance and the differences between group and individual. First, we're going to talk about group insurance. With group insurance, you pay premiums. X amount of money comes out of your paycheck to pay for your policy. And it's based upon your income. So what the company says is, we'll make sure that you're covered for 60% of what your income is. Hypothetically, if you're making $100,000, 60% is covered, $60,000. Now, what they do not let you know, and this is the majority of companies, is it's fully taxable. You're gonna, whenever you look at your pay stub, you'll probably see something that says pre-tax on it. Ultimately, what that means is the amount of money that you're paying in there is growing pre-tax, and it's going to be taxable on the back end. So that 60% is, depending upon your tax bracket, is only going to be about, let's say, 75% of it is actually what you're going to walk away with. So for easy math, you make $100,000, you'll only be walking away with about $40,000 to $45,000 after all said and done. A lot of people don't like that, but they do understand exactly the ease of group disability because they do not constitute underwriting. That's one of the pros. That's why you go with group disability. Now, if you're young, you're healthy, you don't have really any ailments, you should really look at individual disability because it can be ultimately cheaper than what you pay through your group. Because a lot of times when you're younger and you're healthy, you're paying for the group as a whole. So you're going to have a lot of unhealthy people, a lot of older people within those plans. So it all depends upon your own situation. Also, disability insurance, a lot of people don't want to work for that certain employer for the rest of their life. Or they want to go and make sure if somebody else offers them a better job, they're not handcuffed because their disability is with that current employer. So when you leave, the disability insurance expires. A lot of people don't like that. With individual disability, you go to a company, MetLife is very big, you have different ones, Genworth, Mutual of Omaha, John Hancock. They all sell individual policies. So it all depends upon your occupation. 60 to 80% is going to be covered. So if this is 60%, you could supplement it with some individual disability to make sure that your 45,000 that you're used to making 100 grand, maybe that might be bumped up to about 65,000, maybe 70,000. You could use it as a supplement, so you could have group and individual, or you could just have individual. And what this would do would be 100,000. Let's say they give you 75%. $75,000, because you're not getting a tax deduction going in, it's going to be coming in tax-free coming out. So if you were to become disabled, and it's more specific, it's specific to your occupation, you could have certain policies molded directly how you want them. You could have one that are more laxed, that is just, okay, if I get disabled, this is what it's going to pay me. Or you can have one that's particular to your occupation. So we have a lot of surgeon clients down here, pharmacist clients, a lot of specialty clients that ultimately, if they can't perform the duties of their own occupation, what are they going to do? They did all the schooling to deal with their occupation. That's why they're making that large income. You could take this with you. If you leave employers, you can take it with you. That's a lot of people in the medical field, or a lot of executives. They're very good at what they do, and a lot of headhunters, different types of recruiters want to have them work for their companies. So ultimately, you have peace of mind. You lock in your age of exactly when you take it, and you're just paying it. You could have annual renewable premiums where it'll increase little by little every year. You could have it where it's level premiums, but ultimately you could take it with you. So the main difference between group and individual, if you are healthy, if you don't really have too many ailments, and there's different companies out there that specialize in whatever ailments you have. If you're not offered group disability, definitely try out individual. If you are offered group disability and you are healthy, see exactly what the cost is. I mean, it doesn't hurt to at least try, to at least get some quotes out there and to understand exactly what your options are. Because ultimately, that surgeon who breaks his arm and now he can't perform surgery anymore, it's going to pay him a salary. It's going to pay him, he can't be a surgeon anymore, but he could go and teach at USF. So he can ultimately double dip and have two incomes hitting him, one with the disability coverage and one with his occupation that he decided to go with. Once again, this all depends upon your situation. So depending on what occupation you are, different things around your family, your goals, we're here to help you. Give us a call toll free. We have a 1-800 number. You can contact us 24 hours a day, 7 days a week via email, or you can even video conference with us. Understand your situation. This is very generic, vanilla information. Hopefully it helps you understand it a little bit better. But give us a call. We'll mold your situation we'll mold your situation to a designated plan, and we'll try to help you out best we can. Once again, my name is Derek Afasi, and I thank you for watching this video.